name is Hartej Singh. I'm the co-founder of Hosho.io. The word Hosho itself means security in Japanese. And we're about a team of 45 people on the roster based in Las Vegas, Nevada. And we focus on cybersecurity in the blockchain space. And so our perspective has been a bit unique. We've done smart contract auditing of over 100 ICOs. And we've grown a team of mostly white hat hackers, many of them with a strong DEFCON background. If you're not familiar with DEFCON, it's the world's biggest hacker conference based in Las Vegas. And we're based in Las Vegas. It works to our advantage. We're able to poach from the best white hat hackers, or white turban hackers, if you may. That joke works everywhere, by the way. It's so fun. And some of you may have heard me use it before. So I'm to talk about a little bit about launching a token sale from a cybersecurity perspective. And I start the presentation off from more of a early stage VC perspective, which is often not discussed in the space, which I think companies in this space need to take a page out of the book from accelerator programs like Y Combinator, which have done a really good job at asking the right questions to early stage companies. What kind of problem are you actually solving? And this presentation is a bit older, and I want to iterate on it because one thing I say about this is, in the book, The Business of the Blockchain by William Ogier, who's actually here somewhere. There he is. He actually, I always quote you, by the way. It's always in my mind. It's awesome that you're here. Like, I'm really flattered, honored to meet Mr. William Ogier. It's like an epic idol of mine. But Twitter didn't exactly solve a problem. It enhances humanity, right? When in the age of the internet. And so today, in the age of the blockchain, I'm very interested in knowing either what problem are you solving, or how are you planning on enhancing humanity by leveraging trustlessness and decentralization. And it's super important to me, why are you the right person to be doing this business? Personally, if I'm wearing my investor hat, I want to know that the team of people that are building an oil asset-backed token have a background in petroleum engineering and have direct ties to the world's oil owners. Not a group of ex-McKinsey, Harvard MBAs that have calculated how they're going to make their first few $1 million. I'm more interested in people who actually have a great reason as to doing what they're doing, and I want to know why they're specifically qualified to be doing it. Where are you today? More and more, as this space is evolving, we're seeing that investors are demanding a demo of the actual product. This shouldn't be shocking. The product needs to be built. More sophisticated companies in Silicon Valley, when they're raising their first $1 million for 20% of their equity, they are demanded to at least be earning 10 to 20K MRR. And in this space, they don't even have a smart contract written. That needs to change. I am a firm believer in strategic investors, and I always tell companies that for your first round of funding, whether it's an equity round or whether you're raising a token for a DApp, that talk to your first group of investors that add the most value to you. Someone who's going to pick up the phone and commit to 5-10 hours a week on the phone and to want to sit on your advisory board. And if they're not willing to invest in your company, why are you giving them an advisory seat? Because if you do end up raising capital, whether it's an equity investment or you do a token sale, that advisor's money is not where their mouth is. And you just put somebody's face on your website, and they have no commitment about how much time they're actually going to commit to your company and what value they actually add. To me, this is common sense, but in this space, lots of people are putting people's faces on their website. In fact, some people are paying other people to just have their face on their website, and they add literally no value. It's super important to have great legal counsel. Here in Gibraltar, Hosho partners with Hassans. It's one of the best law firms that we've been partnering with for quite some time. And it's super crucial at a very early stage to have good legal counsel. On a weekly basis, I get a LinkedIn message from somebody guaranteeing me some return on their token. And I respond with seek legal counsel. And I usually get a response back saying, we have the best lawyers in the SEC. Bullshit. You need to get lawyers. Good lawyers. Why do you need a token? Fair question to ask. In today's market, people are launching a pre-ICO, doing a private placement of they're doing a private placement of their token. In the United States, at least, a way to be on the bottom of the list for the SEC is to do a private placement of your token and to plan to not ICO. But people are buying tokens, getting delivered this token, the token's being traded on an exchange. But how many of these tokens that you have that are being traded on an exchange are actually being leveraged in a decentralized application? Like almost none. We've audited over 100. We have almost no clients where someone viably uses the token today within a decentralized application. And most companies have a tough time answering this question for viable reason. Now that we're seeing more blockchains be born, like at least for the last 10 to 12 months, all of the audits that we've done at Hosho have been ERC20 mostly on Ethereum, ERC20 tokens on the Ethereum blockchain. It's a brand new language for Ethereum Solidity. And I tell companies to, at this juncture, we have newer blockchains like Stellar, which we were just having a discussion outside with Hassan's a law firm about how Stellar is such a good blockchain for what Stellar is specifically good for. For example, payment processing, where if you are doing something in payment processing, there's a company called Flutterwave, where today Uber in Ghana, the payments in Ghana on the Uber application for MasterCard and Visa payments are made through Flutterwave, which is based on Stellar. So the consumer using the application Uber doesn't realize that blockchain technology technically is being leveraged today. And my example for this, why I think that's brilliant, is when you told your friend to sign up for Facebook, you didn't happen to mention that Facebook is built on HTTP. No one brings up HTTP or TCP/IP. No one brings up the protocol layer of the internet when we talk about it. No one says, oh, go sign up for Facebook. It's HTTP. It's when blockchain adoption happens, there's not going to be a barrier. And it's super important to think about what blockchain you're going to build on. Like very commonly, at least today, in these next 3 months, you're seeing companies say, well, eventually we're going to build on Stellar, but we got to do the token sales, the ERC20 token. It's going to be on Ethereum. We got to do the fundraise on Ethereum. Eventually we'll go to EOS, or eventually we'll go to Cardano. Eventually we'll go to VeChain. Slow down, maybe pump the brakes for a little while. There's no rush. Maybe you should build your product, but don't. Everyone has scarce resources. Build on one blockchain, commit, and stop sucking. Some of this stuff is just common sense, really. And so white paper and smart contract. This is a marriage. So when you've come to the conclusion you want to leverage a token within a decentralized application, a lot of companies are outsourcing the development of the smart contract to one company, and they're outsourcing the writing of the white paper to another. And this is causing massive problems in our space. So most of the times that we find errors in the smart contract, we're finding vulnerabilities in the business logic. I can give you an example. Just last week, excuse me, we were auditing a smart contract, and if that token sale had gone live, the founders of the token would have received none of their tokens at all. Another example we had last week, the white paper talks about 20 million token allocation, and the actual smart contract only allocates 12. So you just forgot about 8 million tokens. It's no big deal. It's an utter shock when you have these companies raising $40, $50 million, and this is the state of the smart contract, being written by mostly ex-web developers who are inadequately qualified to be writing a smart contract that has this many millions of dollars flowing through it, and if this smart contract gets hacked, money gets stolen. So it's like me telling you your phone got hacked, you might not care. Your Bank of America application, your banking application got hacked, now you care. Money got stolen. And in this space, that's super, super crucial. And it's amongst the cybersecurity auditing world, when someone's auditing your smart contract, in addition to automated tooling, someone is reading the white paper and understanding the token economic model that you've presented, and they're marrying it line by line to the code. And they're reading the code, which hopefully compiles, and they're marrying it to the white paper. So my advice is, keep people that are high quality, ideally in-house, and at least let these two human beings, if they're two separate human beings, be in the same, under one roof for a couple of months maybe. I mean, I refer back to the Y Combinator days because it was the time when in the first 3 rounds of Y Combinator at least, they would force all the companies to move to Silicon Valley and to be under one roof and encourage them to work under one roof, and this whole startup culture evolved. And coming from that background, I asked myself, like, what happened? Like, did we forget about all of the awesome advice we had from the startup world and the crypto world? Like, can't we, half of the crypto companies I come across wouldn't survive a demo day. They wouldn't get into YC. Roadshow, PR, marketing, and content, all of this comes after. And even here, my suggestion is simply to work with top-tier firms where you're working with you're working with moral, ethical human beings that you know where their jurisdictions are, you know what laws that they're going to follow, you know that these people aren't illegally taking percentages of fund raised, that they're doing KYC and AML, and we have a lot of quality partners along these categories, and we see ourselves as a nexus of deal flow, and we like to partner with lots of people like TokenMarket and Waxman PR and lots of the top firms in the space that offer these types of services. One of the things that I think is also not talked about enough in this space is what are your in-house security practices? So most times when I engage with companies, I ask them, so who's your head of security? And they point their finger to the CTO. And it's not the CTO's job to be thinking about the security of your company. The CTO's job is to be overseeing the software development and the architecture of the software development. And companies definitely have the money to afford to hire someone to focus on security, yet they haven't assigned someone to simply focus on security. And in cybersecurity, we like to say that most of the errors that will occur within your company and the vulnerabilities that you have are all human-based. So, like recently we had a client had a spear phishing attack. This wasn't that recent, it was like 3 or 4 months ago, and they had a spear phishing attack where the hacker monitored the Twitter accounts and Facebook profiles of all of the employees of the company and found out that one of the employees is obsessed with dog competitions, dog walking competitions. It's true. And this woman was followed on Twitter, and basically the hacker made a fake website for dog walking, and I don't know if it's dog walking or dog dancing, but there was some competition with dogs, and this woman is obsessed with it. And so the hacker made a fake website for dog dancing near her house and found an actual venue, made a fake website, and targeted this woman, emailed her and said, congratulations, like your dog has been selected to sign up for this dog walking competition. And like, mind you, this is a very secure, highly technical team, ex-MIT people, very sharp cybersecurity experts working, but there's one employee obsessed with dog walking. And this hacker emails this woman and says, congrats, your Doberman Pinscher can compete. And she clicked this PDF, and within 8 minutes, the hacker was watching all of her keystrokes and watching her screen. And so he or she, the hacker, basically was monitoring all of her keystrokes and gained access to the company system. The company then lost millions and millions of dollars in BTC. It was within 48 hours of this happening. And so the weakness is the humans, and if you had a head of security, you could at least have some systems put in place about opening up random PDFs, two-factor authentication, using company laptops. Is everyone using a company laptop? Is everyone using a company mobile device? Have we thought about the routers? Are we using Mattermost or Slack? What are our inward communications? You need someone to think about all of these things. At least at our cybersecurity company, Hosho, we have 2 people assigned to this, and they're extremely diligent, almost annoyingly so to me. I'm just like, got to reset everything again. And like, you got to re-log in and install this in your computer, and they're monitoring everything. But to hear other sophisticated businesses, billion-dollar-a-month publicly traded companies not have a CISO and not have someone dedicated to security, this is a problem. People need to just have a long, hard discussion about their in-house security policies. And I feel like I could talk about that for another 4 hours, but I've just touched on some of the big things. And I'm happy to talk later about this. Pretty easy to find. this is a good slide that shows quickly some of the examples that are really well-known companies in our space that have lost millions of dollars due to a lack of respect for security. Parity was a really great example where I feel like even my intern would have caught some of the mistakes that they made. They just didn't initialize the wallet DB. They didn't get a re-audit of their code. So when you write a smart contract, if you change that code, you must pay for a re-audit. You must find a professional third party to audit that code. CoinDash, they made a website in WordPress for their private presale of their ICO. Never do that. I shouldn't have to tell you this. WordPress is not secure. And the night before, we were considering investing in this. So we have a capital fund in Las Vegas called Pink Sky Capital, and Pink Sky was considering an investment in CoinDash. My co-founder, Yo Kwan, sent them an email and saying, look, we've been evaluating actual investing in your company, and there's security vulnerabilities in your website. And they wrote back very similar responses to my LinkedIn messages, like, we have the best security team, not to worry, da-da-da-da. I was like, all right, well, screw you. And the next day, they actually got hacked for, at that time, it was $10 million worth in Ethereum. The hacker went into the website and just changed the address where the Ethereum gets sent. And it was $10 million went to the wrong address. Awesome. Dash was common. Yeah, the hacker taught him a lesson. You know, the hacker hacked it and then the hacker repaid it. But, you know, that's besides the point. Stop sucking. Smart contract auditing is a tricky thing that's happening right now where we're finding that there's not enough qualified talent. Like one of the biggest issues in this entire industry right now is that there's not enough qualified talent to both write software and then audit software. When it comes to auditing code within the space, nobody really knows Solidity, who has a cybersecurity background and has a QA mindset. If you have an InfoSec background, you've had minimal incentive to quickly learn this brand new language on Ethereum called Solidity, and those who already know Solidity are too rich to get out of bed. And the other people who also know Solidity or have quickly taught themselves Solidity are planning to be too rich to get out of bed. And they don't want to come audit code, they want to quickly write a smart contract that might compile and they can do a private presale and move to Malta or Gibraltar, one of these blockchain islands. This is a peninsula though. And Solidity is a brand new language, and there's not enough qualified talent. And so you have people that are ex-web developers who have taught themselves enough Solidity to copy the ERC20 guidelines and try to whip together a contract that may or may not compile. They're not full-stack engineers. They're unqualified. It's a tricky time where we actually have viable companies with qualified founders that are hiring companies that don't have qualified engineers to be writing smart contracts that have millions of dollars flowing through them. I think I'm being clear. Penetration testing is another big thing that we have a focus on in our company, and we're seeing that exchanges are being hacked all over the world. We recently saw a lot of bad news come out of Japan. We had BitHum, and our company's been constantly being bombarded by the press, and they're calling me and my co-founder, another exchange got hacked, what do you think? And all we're saying is like the same response over and over again. If code changes, code has to be audited, and every time code changes for an exchange, they've exposed themselves to more security vulnerabilities. And so we've been taking a big hand to speak closer with regulators in order to explain to them that as code gets changed, there's room for security vulnerabilities, and that somebody has to have a white hat approach to actually hack into the exchange on a quarterly basis at the bare minimum. And we even hesitate to say quarterly because depending on the size of the exchange, depending on the density of its code, it might be necessary to do this monthly. And what we're finding is exchanges have lots of security vulnerabilities. There's room to do strong penetration testing on a regular basis. And a lot of them have fake trading volume. And a lot of this stuff has to be exposed because you have listing websites that are taking the data from exchanges as if it's real when a lot of it is not. And there's no regulation arm, it's a wild, wild west right now. And so, we're the sheriffs in town. These are some of our partners for Hosho. I had mentioned some of them. TokenMarket, Walks in PR, Kiwis, the PayPal of Russia, and lots of great partnerships that we want to be able to send people to that do high quality work. The biggest shift that's occurring in our space is tier 1 clients, Fortune 200 companies that are coming to us saying, who in this space is sophisticated enough to have a sit-down discussion about how we're going to tokenize a part of our business, and that's a really big part of our focus right now. And this is why we partner with people like TokenMarket. This is why we partner with people like Hassan's here in Gibraltar. And it's a really large focus of ours to be able to work with those who have the caliber to sit down with the Fortune 200 to enter this space, to tokenize parts of their business. That's my face. And you can write down my Twitter. I'm the Hartej. And that's all I really got for you. I'm happy to answer any questions that you have. This headshot of me is kind of scary, actually. We had this headshot photographer come and make me squint and, you know, put my cheeks together and stuff, and I think it's a little intense. So I'm going to tell my team to change it. But yeah, if you want to find me after, I'm wearing a red turban. I'm relatively easy to find. Find me. Thank you very much.